why you should be investing in real estate during this recession, along with all the opportunities you guys are going to be able to get, and my 2 cents on the real estate market and the current state of that market today. All of that coming right up. What's going on, everybody? Steven here, residential real estate agent and investor, bring you everything that you need to know about real estate. So if you're new to my channel, please consider subscribing by clicking that subscribe button and that notification bell. And it wouldn't be a YouTube video if I didn't ask you to like it. So go ahead and give this video a like so that I can get this video to as many people as possible, because after all, this is why we do this. So why do I feel that you as an investor or potential investor should be sitting on the sidelines waiting to invest in real estate during our current recession? Well, it goes back to what's been going on in the real estate investing market for the last couple of years. And the fact that rental real estate or rental properties have been on a huge surge. They've been on fire lately. And if you've noticed anything, or if you actually looked into it, it's been almost impossible to buy them. And the reason why is because the numbers actually don't make sense anymore. Properties started to get so much in demand that investors were actually overpaying, over leveraging, and cap rates started to come down, prices started to go up. I tend to be an investor who runs my numbers very conservatively, and I like to account for worst case scenario. Again, nobody could have accounted for what actually happened. I mean, maybe somebody you out there would have thought of it, but the way the economy was trending and the way things were going, it was hard to say that this would actually happen in the way it did. It really put us in a position of a time of uncertainty. And during times of uncertainty, obviously you need the cash flow, you need the income. It's when you don't have that income that this becomes a problem for you. Rental real estate is where most people are looking at, and I'm of the belief that you should be looking towards that in the near future. I do feel that, again, many people were over leveraged, many people were overpaying, and what's going to start to happen is the fear is going to start to set in. Renters, or owners rather, can no longer afford the debt service if their tenants can't pay it. They're going to start selling their properties at a discount. Investors such as myself, sitting on some liquidity, are going to start buying them, and hopefully buy them at a discount where the cap rates go up and prices come back down, so that the numbers could then again make sense. And with the interest rates being as low as they are now, it's a perfect storm for things to actually start working out the way they should have intended to be worked out from the beginning, where properties were meant to be assets and not liabilities. During a recession, you want to have many rental properties. You don't want to just have one rental property. And that's the mistake that I see that a lot of investors start to make. They want to jump into the real estate market. They want to test the waters and see how things would go for them. And the problem is, if you buy one property to test the water, it doesn't insulate you as well as having many properties will. Think about it this way. If you have one rental property, one condo, one multifamily unit, or one single family home, you're going to have 100% occupancy. And the second that tenant leaves, you're going to have 100% vacancy. And when you have 100% vacancy, guess who's paying the mortgage? Guess who's paying the carrying costs? Guess who's paying the expenses? You. And if you're in a time of a recession where you're already in dire straits on the home front, now your asset just turned on you and became a liability. So it's no fun, and nobody should be in that position. Instead, you should want to increase your portfolio to have hopefully as many units as possible. But let's just take 10, for example. And again, I get the school of thought that they should be 10 multifamily properties, not 10 condos. They should be 10 single family homes. Ultimately, if you ask me, they should just be as many properties as possible, whether that's a condo, whether that's a single family home, whether that's multifamily. I may have my preference, but the point is, as long as you have the scale, you'll be insulated from a recession or from times like these. And why that happens is because if you run your numbers right and you buy well, you'll be able to weather the storm. And by buying well, I mean you want to buy in the middle. Take into account as to what's happening right now. There's a shortage of affordable housing. Developers cannot build affordable housing in the demand that we are actually requiring it for. If you're paying a certain amount of rent, you're looking to downsize, you're looking to downgrade, you're looking to pay less money in expenses. And one of those big expenses for many people is your rent. So you start coming down. And when you start coming down, that starts compressing the middle. And when you start compressing the middle and you're a landlord or an investor who has their majority of portfolio of investments in the middle, your rents start to get compressed. And what happens is you have your rental prices may not go up. In many cases, they may go up, but at the very least, you're always going to have the demand there, because the biggest enemy to any real estate investor is turnover and vacancy. So if you can mitigate those two by virtually having almost no turnover, no vacancy, then you'll be able to cover your expenses no matter what the value of the property is. Because ultimately, at the end of the day, You as an investor care about cash flow. It's times like these that we need the cash flow. If you have one stream of income from your job, but your other assets are paying you steady income, then the problem isn't that big of an issue as it currently is for you. That is why you want to invest in properties that give you the cash flow. They give you the certainty, they give you the insulation that you need to kind of weather the storm. Then you can get the appreciation when things get better. Then you can get all the other benefits that come along with it. But more importantly, you're going to get the tenant pay down or the principal pay down from your tenant, because again, your tenant is paying the mortgage. Your tenant is paying the expenses. You're reaping the benefits of obviously having the income that comes in and the tax benefits that in a later video I'll be making as to what those tax benefits are. But you're going to be making a lot of money, which is the point. So to recap, what you need to be doing if you have some liquidity is to wait on the sidelines until this thing pans out. I do truly feel that a lot of investors who bought these properties at inflated prices, over leverage, will start to panic sell or maybe not even be able to hold on to them. That's when you're going to be able to get those discounted rates and start really building your portfolio. And if you take advantage of today's interest rates, there's almost no way that you can go wrong. Now, on the residential side of things, I do want to just add a couple other items. I don't want to be too long on this, but basically a lot of people have been asking me, since I do residential real estate, what my thoughts are on the residential real estate market. Now, if you know anything about Florida, you do know that, again, it's the #1 migrated state. And since we live in Miami and the majority of my clients are obviously here, I can tell you from experience that before this whole crisis happened, the single family home market was on a tear. It was increasing year after year, or at the very least trending to increase in many different markets. And there was such a short supply that in the affordable housing side, and I would say anything sub 500,000, there was multiple offers on it. And the reason is there's so many people who actually are migrating to the state, who need a place to live, who want to buy. Interest rates were relatively low even back then. I mean, they're definitely lower now, but they're trying to buy these properties and there're just not enough of them. I don't see how that's going to change rather in the near future. First and foremost, sellers are not going to be adding any new inventory unless they absolutely have to. The way I look at it is if you're a seller and you're in today's market, given today's conditions and climate of the market, I would say you're most likely going to wait and hold off until the market gets better, or there's some more confidence as to what's going on. So that means the inventory is going to be exactly what it is, which was already kind of slim in the comparison to the amount of demand. You take into account the interest rates are going down. So a lot of people who were kind of reeling back as to buying are now pulling the trigger because they're saying to themselves, interest rates are as low as I'll probably ever see them again. I need to make sure that I take that into account because now my buying power went up. Properties that I couldn't afford just a few months ago, I'm now able to afford. And the fact that a lot of people are kind of taking their money out of the stocks, kind of taking money out of real estate to have that cushion of security of cash on hand, which is kind of a false sense of security if you ask me, because you're not deploying that money to anything. The people who are actually taking advantage of that are going to really reap the benefits, but there's only going to be so much to go around. So once that is taken out and things start to get back to normal, the amount of inventory is not going to be there. People have already bought it. So I don't see how prices are going to go down. If anything, they're going to start to go up, which is a very scary thought if you think about prices going up in a recession where a lot of people are looking for housing and affordable housing at that. I mean, if we take anything from that, is that the housing market in today's standards and state is completely different than how it was in 2008. For one, it's not propped up by subprime mortgages or ninja loans, as they like to call them, no income, no job verification. The second these no income, no job loans started proving to be right, that there was no employment verification, they couldn't hold on to that asset, then obviously the top crumbled from within and then everything kind of just hit the floor. But if you start looking at the fact that our foundation for mortgages was in a much better state before then, and even the economy before this happened was in a good state as well. I mean, we had a very low unemployment. Mortgages were more highly scrutinized to get, to obtain. You really had to qualify for them. And if that continues to be the trend, then you can see how this recession is going to be different than 2008. For one, it's not even due to the same factor. I mean, it's due to an external factor we have no control over. But if we're somehow able to get the reins on this thing, could be speaking out of turn, but theoretically, if things are able to get back on track, then I don't see how we, in some way, shape, or form, are not going to pick up to where we were. And if that's the case, we were in a shortage of houses, and the condo market, developers aren't going to start to build. So that at some point will start to get filled up again, being the #1 migrated state, at least in my market. So I don't foresee prices dropping. But again, if you have something that you want to share, leave a comment down below. And if you stay tuned for this long and watch this video, then again,
thank you for watching this video and tuning in. I appreciate you allowing me to share my thoughts with you, and I really look forward to kind of continuing the conversation on the comment section below. And with that being said, thank you for watching, and I will see you in my next video.